The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And as you know, big day, Britain. S&P's getting happy here. You know, we talked about looking at this crowding action yesterday, 2082, 2083. Why is that the case? We're kind of compressing up in there. Shorting this was not in order. At least we blocked that side out. Didn't have to go long. But, you know, we talked about the targets also up around this 2101, 2102. We've hit 2102 this morning, 2101, 07, 2102. We backed off a little bit. So, you know, we're on the, God, you know where we're at. We could blow a gasket here the closer and closer the votes come in. I don't know if they do any pre-calculations or kind of do like the U.S. kind of when they come in, they start calculating situation. I'm not exactly sure about that, but, you know, this thing could get really happy. What does that do for equity valuations in the United States and, you know, all the ways we normally value stocks? I have no idea. But, again, you know, this is about sentiment and perception. So we could go higher, folks. And what Steve and I were talking, Steve is actually talking about this, Steve Banger, who we had on the show on Monday about you know, kind of had him on for about 45 minutes on this Brexit situation. You know, he had talked about this market doing a move up, and I'd, you know, been talking about, you know, this is not really looking like the shortest dream in the near future. Before we start coming down, I think Tom has actually talked about that. So, you know, even though we've reached this weekly unfair high, you got to remember, I mean, we are literally making high. I mean, if you just kind of forget profiles for a second and look at the long term, and we're not looking at the continuous, I'm just looking at the front month, September, we're making higher lows. And again, we got another weekly higher low, and we compressed up into this. This doesn't mean we have to have a double or triple top and, hey, guess what? It's time to short this thing. A lot of times they'll run people out of these markets on the short side before it makes the correct move. Gold does that a lot. And if you look at the S&Ps right now, you know, I'm looking at the breadth situation on the scanner. I'm showing that right now. Positive breadth, no real hints of, you know, cracks in the armor. Here's a daily. Here's a weekly. You're not supposed to be shorting this inflection point. You got to, for a market turn, if we started showing cracks in the armor on the breadth situation, and again, a lot of these stocks aren't open yet, so this is going to be even more positive. When we're at these upper inflection points, especially on long-term weekly, we have in certain times, you know, if you watch this show, I mean, September, October 2014, we've had some issues, or no, was that 14? Maybe it was 15. Can't remember. It's been very rare occurrences when the stocks, based on net breadth calculations in the S&P, you know, have kind of started rolling over and not cooperating with necessarily the leaders of the pack and the index move up. This is not one of those cases. And, you know, when that happens, then you got an anomaly, then you got a chance to take advantage of an anomaly. So, again, I would, you know, long-term market turn possibilities here, I'm not seeing it. But 2101, 07 obviously is a trading opportunity. But again, I wouldn't, you know, put all my eggs in one basket and short the thing and not put the stops in. And I just, with this Brexit thing happening, you could have the European markets do a move up. And then when we get back down below, if we do 2101, and especially get a weekly close, we could do a key reversal, but there's no reason to suffer through that before it happens, is what I'm trying to say. We're not going to talk about Great Britain citizens today. Is Joe in the den? No. Joe from Scotland, he's not in the den. We spare no culture, country, or race or religion on this show. You all know this. I'm just kidding. Here we go. I want to hit crude really quick. All right. So, man, this really disturbed me. I got up a little after this had happened yesterday, and then it was kind of floating down. I had a trading opportunity 50-52. Talked about that the previous day. This is the August contract. 50-52, CM fair high. We reached a high of 50-54, backed off. That was disturbing that wasn't caught when it happened. Got up a little too late, didn't put the orders in, and then I didn't want to chase it down. So what do you do with crude now? Decent news out of some comments out of Saudi Arabia, just stating that they think the end is here, the worst of the oil glut, indicated that OPEC kingpin is preparing to reassert a degree of control over the market after 2 years of letting prices fall. For what that's worth, I would, of course, be saying that also if I was sitting on a bunch of oil and it was cheap. Let me get this over here. So what do you do with oil now? In my opinion, and here's the August contract. If you watch this show, I haven't been a huge fan of getting long oil in a big way, especially after we started getting past 48. Just thought the risk was really to be long after that situation. Got a new profile here. Had a little trading opportunity off that 50-52. In my opinion, this market gets a little happier, the equities market. Oil's kind of sometimes a sympathy trade, like, oh, wow, man, the equity's going up and the economies are great and oil's going to go up too. So you could get a little bit more room on the upside. 51.45, I would wait until that area is approached until you try to start doing any trading bounces or shorts. I don't think 50.52 is going to hold. Is it a long-term short? I don't think so. You just got a trading opportunity, 51.45. Make sure you put your stops in. I don't say that enough. You don't put stops in. It can be a nightmare. Here's gold. This is a trade we talked about putting stops in now above this 1274.90, 1275. If you'll notice how these things act when they start breaking down and getting below profiles, you get below, you go back and retest. Those are very decent, powerful trades, high probability trades, in fact. And I hear the music. That means we have to go. Please come back to see us.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So we're kind of finishing up with gold here, and this is we retested this again this morning. 1274 reached a high of 1274.90, which was actually, that's wild. That was right to the tick of the unfair highs on the dailies. Excuse me. And when this thing starts not being able to get above these areas, second try in a row after the close below, you got some decent opportunities here when it comes to gold. So let me adjust my stop here. I'm actually short gold right now. Okay. All right. So as we're looking at the 10-year, this one's caving in a little bit here. Obviously, the U.S. market's going straight up. Maybe not the safety play necessary with this Brexit thing seemingly becoming I mean, break even, is that a victory on the pre-vote polls? I don't think so. So the 10-year obviously broke down that 131, 12, 13, 131, 705. Again, I actually got stopped out of this. It was probably stupid to be in it before this vote. But again, just trying to play those weekly unfair highs. And again, that's what stops are for. Just giving you an example. We're 50-50 at best, folks. Just kidding. God, that's not the one I wanted to show you. Sorry. I'm sorry. Let me get back to what I was going to show you. That's not it either. All right, here's the Eurobond. Very similar situation as the 10-year. Just kind of breaking down, rates going up a little bit. Safety, Let's take a look at silver, how this thing's acting. All right, so silver, I think we're duly expecting 17 to hit. Risk reward not that great on this one, but again, I think silver can pull back a little bit. Not the best long out there right now, in my opinion. We're going to hit the XLE. We talked about the crude oil in general. We're trading up this morning. We got a print around 68.80. So we're back above all daily unfair highs, weekly unfair highs. That's another little bit of a pre-warning for oil that we're probably going to reach a little bit higher, that 51.45 area. Not exactly excited about super being long oil stocks in general. But again, if you go into the scanner, the way I like to trade these type of scenarios is that I think oil is going to bump up a little bit. I'll drill down into the XLE sector and I'll try to find the stocks that look extremely attractive on the long side. So if I look at NBL, let me just take a look at this one. I'm not saying this is extremely attractive. Nah, that's not the one I want to trade. Looking into, let's just take a look at this one, DVN. Yeah, this is one looks relatively attractive. Picked it right out of the scanner. So the longs would be situations like this. And why DVN? Starting to get above the noise area on the weekly. Let's see where we're printing this morning, if we got a print. Yeah. Wow. Daggone. That was a nice setup yesterday afternoon. We've obviously moved higher. Let me pull up DVN. But those setups, if you look for this, a lot of people use this. A lot of institutional guys look at this scanner as kind of a nightly research review. So they can put some things on their radar screen for the week, for the day, for the month, monitor those, throw them into a custom portfolio. And, they're not necessarily day trading. But the reason that this looks so attractive is we got above top yesterday on the weekly. The daily have been clean and clear, kind of sitting on the highs there. The more important feature of this is you got a chance to play defense. 37.50 down to 37.13. Oil is looking a little bit more bullish. We're going to probably hit 51.45 on the August contract, and this thing's obviously relatively strong. So, on the contrary, what is this one? Yeah. All right. So, contrarily speaking, WMB, let's see if we got any prints this morning. Man, isn't this so cool? Yeah, not acting that well. So this might be one you could look at as far as being on the edge of the cliff and could fall off. So, relatively weak stocks, relatively strong stocks, you can find a zillion different combinations in here. If I want Valero Energy, let's take a look at this little thing. Yeah. Yeah, we got to get back down below 52.48 on this one. Let's see if we're printing this morning. No, we're not. But again, when you see this cell structure right here, it's kind of a change in tone, green shoots, if you will. You got to watch out for that. You want to get this back into the balanced area to start looking at this. But this has been something, hasn't acted that well for sure, and would be one to put in the relative weak basket. Man, you guys are talkative this morning in the den. Everybody's in shock because of the Brexit thing. I understand. I get it. XLF, the bane of my existence. Still looking at this, even though we popped up this morning, looks like we're trading about 23.10. Markets could drag up a lot of different sectors, but again, I think we easily have in order here 22.04 on this particular sector. Let's take a look at the utilities. 10-year coming off. Want to see how this is kind of, yeah, no kidding. 50.15. This one's probably not the sector to be in. I mean, you probably got to look at this as, if the Brexit thing doesn't happen, you've got a great place to play defense, and the 10-year is probably going to sky. If this thing spins around up here and the 10-year continues to sell off, in my opinion, you might have the ricochet trade of all times on the north side, but again, put the stops in for stuff like that. But you've got to have some more confirmations, get down below at least 49.88, 49.91 to start looking at this as a contra trade to get back in the balanced area. Remember, if the markets start going crazy, this is a lot of times the anti-sector. Keep that in mind. Keep your eye on the 10-year for this. I like how it's holding up. Very much. Let's hit the currencies really quick. Got about 10 seconds here before the break. All right, here we go. British pound, no mystery there. Just complete euphoria. Does it deserve to be this high? We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, welcome back to the show. Do we have a caller right now?
We do.
Hey, how are you?
Okay, how are you?
Doing all right. Is it Daisy?
Yep.
Nice to speak to you this morning.
I was listening to you.
Okay.
Pardon?
Yeah, nice to hear your voice this morning. Hope you're doing well.
Yeah. I was really interested in what Steve Binger had to say the other day about the Brexit and the British index.
Mm-hmm.
And so I wanted your opinion, if you have anything there, on EWU and the German one, EWG, like compared to what the S&P is about.
Okay. All right. So,
So can you bring up the EWU?
yes, I'm looking at it right now. It's
Okay.
probably a little bit of a delay on what you're seeing on the screen. So let me just see where we're at this morning. It looks like we haven't printed this morning yet. You know, my whole thing on I think this is not something that's been keeping the market down. I think the UK markets and the German markets and everything else have just kind of, they are what they are. They're there because that's where their economy is kind of at right now as far as equities in those markets. I think this Brexit thing is going to be a short-lived little pop if it comes out to where everybody wants in Great Britain
Wants it
votes.
to be, yeah.
Correct. Thanks for helping me this morning. It's early. Haven't had enough coffee.
It's early here too, boy.
I'm sure you're in Denver.
You start at 6 a.m. my time.
Oh my goodness. Well, thank you for getting up and listening to this show. I hope you get some use out of it. So, I think we're probably going to have a short-term little pop in these things. I don't know if there's going to be a ton of follow-through, and it's hard to trade timing based on what I just said. I think you've got to let this thing move and do what it's going to do, wait for some new information to appear, and then try to lean against that defensive-wise on the short side. I mean, I fully think that, the people are sitting on the launching pad and going to get real happy on the long side if this thing gets out of the way. And then we're going to go back to ultimately after a couple of days, well, what do we do now and what do we trade off of now? And we're going to go back to looking at the same information that we were looking at before the Brexit. And I just don't think... Go ahead.
You remember that Steve said you could do something like short the S&P and go long the British index.
Yeah, let me get back to your original question before I go off on another tangent. Yes, that was an interesting situation, which is basically long volatility on the European, for instance, on the FTSE, and then long calls on the FTSE and short calls on the S&Ps. That intermarket spread, you can actually map that on the e-signal, and if I have time on the next break, I'll try to set that up to what that kind of relationship volatility-wise because I think the guys at Thinkorswim, who was saying this? Was it David? Was it Daryl Martin was saying that the spreading on e-signal? I can't remember what host it was. That the spreading on e-signal, which is what I'm showing you right now, really has a great part. This platform really has a great spreading part to it. So I'll try to get that set up on the break. But he was speaking generally. He's in Chicago. If you trade in Chicago, ultimately you start getting into these arbitrage spread situations. A lot of the things going on in the Board of Trade of the CME, seemingly it's kind of a blue collar. Let's kind of find these anomalies and try to take advantage of them and not take on a ton of risk. Let's be able to take our ball home every day and come back and play the next day. And that's kind of the mindset he's always in. I don't really see him going directional a lot, like without hedges on and without the possibility of hopefully capturing some free expansion or contraction in option volatility. So he thinks like that. And this is just one of the things that he was speaking of, in that same mindset that I think is very cool. So, right. I mean, he was saying, long the calls, long the volatility in the British or the European components and shorted in the S&Ps. And I think that's not a bad play. I mean, I think when he talked about it, this thing, when did we talk about this? Monday?
I think so.
Yeah, well, if the EWU, I mean, this is the daily on it. I was showing the weekly before. We really got a big pop in that. I know you probably watched that after that was. Go ahead.
The last 5 days, it sort of took off.
Yeah, and your question is, does it have some more juice left in it? I guess.
Right.
I think it could actually. But you can always monitor those situations, and here's the EWG, very similar kind of concept. I think this is still the play. I don't think you got a lot of risk in it. I think ultimately the S&Ps are going to outperform those markets. I'm looking at the S&Ps again right now. You probably got a little bit. Yeah, ultimately. But in the short term, I'm kind of with Steve on this, that, the volatility and the initial climb is probably going to be the relief rally over there, and we're probably going to lag behind that. But I think ultimately our markets are, again, it's safety play combined with stability, combined with other things. I think the U.S. market is, you look at it. I'm showing the daily chart right now in the S&Ps. This is, if I'm wanting to be short this right now, I'm terrified. This is not the type of trend compressing up into all-time highs again that I want to see if I want to be short. This is, and plus, I look at the information on our scanner a lot, Daisy, and, the long-term breadth really, especially on the weekly here, is, it's been positive since late February,
Well, and maybe, like Tom said, there's something to do with the negative interest rates elsewhere.
Yes, there's a lot of things lining up to where this is probably still the place to be for equities. But in the short run, the relief type thing that you just spoke of earlier, the relativity, right. I think that's still a good way to look at this in the short term, especially on this Brexit thing.
All right. Well, thanks so much. I appreciate it.
You're welcome. Were you the one that called in about Solar City before, or was that somebody else?
Yes. Oh my God, yes.
Let's pull that up if you don't mind.
Doesn't it tank? Oh.
Yeah, I know. Well, how is this? This is the Elon Musk situation now, right?
Right.
Okay.
Well, and I'm into solar, and so I was really interested in either Solar City or FSLR, and Solar City seemed to be setting itself up for some really good stuff, connections with some huge utility company just took place. Talked to you the last time.
Right. Did we talk about 35, 36? Was that when you called that might be the near-term targets on that after that breakout? Yeah.
Yeah.
Yeah, we got into that area and came off, but that's what, you never know what's going to happen with these things, Daisy, and that's why I use these profiles just to play defense with, and I say it a lot, and I try to follow my own words on these things, but when you have a breakout, I kind of genuinely look at the next time frame down, the daily in this case, to stop me out. I'm showing the daily right now, so really appreciate your call. Great information.
All right, and thank you so much for the info.
Yep.
Bye.
Yep, bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Great call from Daisy out in Denver, and thank you for getting up early. And Tammy, thank you for getting up early. God, that's early. So gold, man, even though we've had, I talked about this earlier, even though we've already had kind of like the retracement off this 1275 again this morning, I think we could really edge a lot lower on this. I mean, everybody could just get happy and the world's problems are over for a little while and gold may sink here. But again, stops above 1275 on that one, on that concept. Let's go back to a couple of currencies here. We haven't really analyzed the most important one today, the BP. Yeah. So everybody's getting happy. 150's going to be a big number for this. Here's the daily. There's nothing really to hang on to right now, and 150 is just a previous inflection point. You know, I don't even know if the British pound deserves to even be this high, all things considered. I don't think it was tamped down, past the 152 area when some concerns started creeping in on this. But again, I think you're getting close. I mean, let this thing happen. Let this vote happen. If you want to be a cowboy, or not a cowboy, but just buy some lottery tickets on the short side, the puts are always, you could, let's say, everybody's wrong in the market right now. Everybody's on the same side of the trade. Buying some puts down at 140 probably for next to nothing. It's better than going to the convenience store and playing the numbers game. This actually could happen, and if we get any type of, disturbance in the polling numbers or whatever, you might have some winning lottery tickets down here. So keep that in mind. All right, let's take a look at the euro. We've already reached some inflection points this morning. Let me just pull this up. Here we go. These are all in the scanner, by the way. So we reached 114, 15, 16. We talked about that being a little bit of lid up into 114.65. There's that weekly unfair high. Do I think this is a short opportunity off of this DMZ that we just got into? I don't think yet. I think we, got to take a look at, letting this thing happen. There's no reason to get in early. Just let it happen. If we can close below that DMZ after the event, that would put a stake in the ground for a while. The yen. Haven't been a fan about being long this, waiting patiently. We're tracing back up in that 105.50 area. I think this is kind of a no trade right now still. And why is my mouse like that? Here we go. So the yen's nothing happening there in my book. Canadian dollar, obviously indexed to gold a little bit here, but strong, sitting on the precipice possibly of getting stronger. I think crude may move a little bit higher here. You're probably looking at 125.55 ultimately as a target on this one. The revaluation of the Canadian dollar relative to oil. Okay. All right, so we're going to take a look at soybeans really quick here. This is one that's kind of a quandary for me. On the scanner, you'll notice that we've got a new profile attempting to appear. I think we talked yesterday about this is kind of a wait and see right now, but it's looking quite heavy. I don't know, John from Philadelphia, I think he's more short-minded than long-minded right now on a kind of a retracement. I think that's the case. Take his words at face value all the time. So, we could have a little bit more of a flush here going on. Again, I think this is a wait and see. You've had some breakdown here on the regulation of the trade up, so it's kind of, sit tight time. There's no reason to always be in the market. That's the situation on beans. Let's go back and revisit the December corn situation. Talked about initial targets the other day around 407, 408 and a half. Why is that? Weekly and for highs, daily and for lows. Guess what? We're going back down into another inflection point. Took a stab at it myself around there. Wasn't real excited about it. Didn't go too heavy. Now you got Custer's last stance here on December corn. You've got the unfair lows at around 397. We're trading 398. It looks like right now. Is that true? Yeah. So got a trading opportunity here. Tomorrow's Friday. We get a weekly close below there. It's just game off for a while. Completely. Farmers are crying. Yeah, they're in a tough situation. They hope it rains, the price goes down. They hope the price goes up. They're hoping for no rain. What a weird spot to be in, huh? All right. Let's take a look at Tesla. Elon Musk is on another personal MO. He's convinced the board to buy Solar City. The guy needs some sleep. Anyway, so people who own Tesla are not exactly super happy about this one. Short term, some of the guys who are hardcore environmentalists may be happy long term that he's moving into this. But here's the weekly. Here's that area, reversal off the 233. So what do we do with this now? Do you try to bottom fish here? I think you've got to sit tight on this one. Here's the pre-market prints, 195. There's nothing down here to play defense on, and we could drift lower. This is a big, over $2 billion in cash, was it? Something like that. Man, that's a lot of dough. Let's hit Apple. All right, so looking for prints this morning. Printing 96 approximately. So again, we've talked about playing defense above 96.43, letting mark. This thing's acting great on the short side, by the way. You cannot. Again, it'll probably go higher once I start talking about this, but you can't ask for something better to look at that's showing relative weakness relative to what's going on in the sector and the market in general relative to this stock. 91.76 is more than likely going to be hit on this, but you got a place to play defense with a little bit of noise above 96.43. We got a little bit of a tenuous situation yesterday, but this close back below is just freaking awesome. Let's hit Facebook again. I'm still looking at this as we're on support, even though it's not actually acting that great in the last 2 weeks. Support is 103.59 on Facebook. Stops below. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Just pulled up the scanner. Actually, let's finish up what we were talking about. Facebook, you got the numbers there. Put up the scanner. I want to see what was kind of lifting its head up, downtrend resistance. Just hit this sort in the scanner, which kind of tells you what that sort is. If you click on that. And I was looking at SRCL, one of the ones that came up here. This is kind of cool. What this sort does is it gives you stocks that are just kind of poking their head up as the market's rallying. In this case, SRCL. Let me see if we got any prints going on pre-market. Yep. Daggone it. Here we go. 102 and some change. Yeah. I mean, we're still not super powerful. Getting back down below 102.42 is going to be very cool for this. And you've got a new profile sitting there, 102.69 daily unfair highs. I think you got a really good chance to play defense against this one. A couple other stocks on this particular. Let's look at First Solar. Achimama. Oh, God. Yeah. Nothing to write home about, folks. This one is destined to go lower, in my opinion. You got some great play defense situations on this one, 49.13. It's not on sale. It's completely not on sale. These stocks, David White's probably talked a lot about solar technology on his show. Maybe you can listen to some podcasts on that. But these are some stocks that technically look ugly. Let's take a look at this one. This is ABC. Again, you might want to be saying, well, guy, why don't you talk to me about shorting it way back here? It is what it is. The trend is here. The wrench needs to be turned the same way. You got some places to play defense on some of these stocks. These are just ones that, downtrend resistance. I'm going to go to breakdowns. Let me go back to my dashboard here for a second. I'm going to go to breakdowns. And it's going to give me stocks, first day breakdown. Let's just take a look at BFB. There you go. And coming off those weekly on for highs. So the destiny on this one could be 94.11. Did I use destiny? You got some places to play defense, 96, 93. Let's just call it 97. Pre-market, let's see. Nothing yet. These are ones, again, market's kind of getting happy. These are ones that are really not happy. CF, good Lord, man, this is kind of attractive. This is possibly do a little flush here on the downside. Now, if I'm long this, I got to be terrified. That's the ones you want to short when they look. You kind of put yourself in the opposite shoes and say, how would I be feeling if I'm long this thing? Oh my God, nightmare. So, H&R Block. Now we are looking good again. This is super attractive to me. Talked about getting into this unfair low the other day. Now we're back down below it. Looking for shorts. Got some decent little breakdown situations going on there. All right. We're going to take a look at another sort really quick here. Uptrend reversals. That one. So these are stocks that have kind of been climbing up that are just starting to show hints of breakdowns. Let's look at AN. That's definitely ugly. McDonald's, let's see here. Ooh. Well, you're in a little bit of a quandary on this one. It's not acting well relative to the market lately. A lot of news out on it, a lot of selling stores in China, blah, blah, blah. I think for McDonald's, you got an opportunity here. Put some short orders below the market here and just catch a move down. But have to have that move down below these unfair lows, 119.67, to really get, excited about the break of the long-term trend finally. Stay tuned for Larry. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.